Welcome to the Global Commerce Academy, your dedicated online resource for mastering the CMA USA curriculum with our 100% free, comprehensive lectures. We're thrilled to guide you on this journey to becoming a certified management accountant. In this video, we're diving into Chapter 5, Internal Controls. This is a crucial topic from the Technology and Analytics section, specifically Part 1 of the CMA USA 2025 syllabus. Understanding internal controls is absolutely essential for success on the CMA exam and in your future career. So, let's get started and unlock the secrets of effective internal controls. Internal controls are the comprehensive systems and meticulously designed procedures that companies strategically put in place. Their primary purpose is to protect their valuable assets, ensure the utmost accuracy in financial reporting, and diligently follow all applicable legal regulations and industry standards. Think of internal controls like the robust rules, stringent guidelines, and impenetrable locks that keep a company safe and secure from potential fraud, costly errors, or devastating financial disasters. They are the safeguards that maintain stability and integrity. From secure passwords and multi-layered approvals to detailed audit trails and meticulous reconciliations, it all comes under the umbrella of internal control. These measures work together to create a strong defense against risks and ensure operational efficiency. Internal controls are designed with 3 key objectives in mind. These objectives are the foundation upon which a strong and reliable business operates. They provide a framework for ensuring that a company's resources are used effectively, its financial reporting is accurate, and it complies with all applicable laws and regulations. Understanding these objectives is crucial for anyone involved in managing or overseeing a business. Operational efficiency. This is all about ensuring business processes run smoothly and effectively. It means optimizing workflows, minimizing waste, and maximizing productivity. When operations are efficient, a company can achieve its goals more easily and cost-effectively. Think of it as the engine that drives the business forward, ensuring everything runs like a well-oiled machine. Financial reliability. This objective focuses on making sure financial records are accurate, reliable, and complete. Accurate financial reporting is essential for making informed decisions, both internally and externally. Investors, creditors, and other stakeholders rely on this information to assess the company's performance and financial health. It's about building trust and transparency in all financial matters. Compliance. This involves ensuring the business follows all applicable laws, regulations, and internal policies. Compliance is not just about avoiding penalties. It's about operating ethically and responsibly. It protects the company's reputation, ensures fair treatment of stakeholders, and contributes to a sustainable business environment. If even one of these objectives fails, the entire business can suffer significant consequences, from financial losses and reputational damage to legal repercussions. That's why CMAs play a major role in designing, implementing, monitoring, and continuously improving these controls. Their expertise is vital in safeguarding the organization's assets and ensuring its long-term success. The COSO framework, a widely recognized standard, breaks internal controls into 5 interconnected components, providing a comprehensive approach to managing risk and ensuring effective internal control systems. Control environment. This represents the company's tone at the top. Management's attitude towards internal control sets the standard for the entire organization. A strong control environment fosters a culture of integrity, ethical behavior, and accountability. Risk assessment. This involves identifying and analyzing potential risks that could prevent the company from achieving its objectives. It's about understanding the threats and vulnerabilities that could impact the business and developing strategies to mitigate them. Control activities. These are the specific policies and procedures put in place to reduce identified risks. They include things like approvals, authorizations, reconciliations, and segregation of duties. These activities act as safeguards, helping to prevent errors and fraud. Information and communication. This focuses on sharing relevant information effectively across all departments and levels of the organization. Open and transparent communication is essential for ensuring that everyone understands their roles and responsibilities and that important information reaches the right people at the right time. Monitoring. This involves ongoing evaluation to ensure that internal controls are working as intended and are effective in mitigating risks. It includes regular reviews, audits, and other assessments to identify weaknesses and make necessary improvements. Each component plays a vital role in supporting a healthy and effective control system. CMAs often assess all 5 components during audits and reviews, providing valuable insights and recommendations for strengthening internal controls and improving overall business performance. There are different types of controls you should know. Preventive controls stop errors or fraud before they happen. For example, access restrictions. Detective controls identify issues after they occur. For example, reconciliations, audits. Corrective controls fix issues that were detected. For example, data recovery processes. A good internal control system balances all 3 types to minimize business risk. In today's digital world, internal controls must cover IT systems too. These are called IT general controls, ITGCCs, and include access controls, who can log in, backup and recovery, what happens if the system crashes, system development controls, how are new systems tested, ITGCCs, are critical in preventing data breaches, financial manipulation, or system failures. This is one of the most important principles. No single person should control all steps of a financial process. For example, the person who creates invoices shouldn't also be the one who receives payment. This separation reduces fraud risk. As a CMA, you'll often recommend proper SOD structures to your employer or client. Even the best internal controls have limitations. Human error. People make mistakes. Collusion. 2 or more people working together can bypass controls. Cost-benefit constraint. Some controls may be too expensive to implement. That's why CMAs regularly monitor and update control systems to reduce weaknesses over time. Certified Management Accountants, or CMAs, are vital to any organization's financial health. But they are not just number crunchers confined to spreadsheets. They are strategic advisors, business partners who bring a deep understanding of finance and accounting to the decision-making table. They offer insights that drive profitability, manage risk, and ensure compliance. A critical area where CMAs make a significant impact is in internal controls. A CMA's role includes designing robust and effective control systems tailored to the specific needs of the organization, monitoring the effectiveness of these controls, identifying weaknesses and recommending improvements, performing internal audits to ensure controls are operating as intended and to detect any potential fraud or errors. And of course, ensuring compliance with regulations like SOX and other relevant laws. Training staff at all levels on control procedures, making sure everyone understands their responsibilities and how to adhere to the established guidelines. Your in-depth knowledge of both finance and information systems makes you a particularly valuable resource in today's increasingly digital business environment. You can bridge the gap between these 2 critical functions. To illustrate the practical application of internal controls, let's consider a common scenario. Expense reports. Imagine you work in a company where employees routinely submit expense reports for reimbursement. Without adequate controls in place, someone could easily submit fake receipts, inflate expenses, or even claim reimbursements for personal expenses. But with a well-designed internal control framework, you can mitigate these risks. Internal controls like requiring manager approvals for all expense reports, conducting regular monthly audits to verify the accuracy and validity of claims, implementing system limits on the maximum claim amounts allowed. Through these controls, you not only prevent fraud, but also ensure fairness and transparency in the reimbursement process. That's the power and importance of a well-implemented control system. To summarize the key takeaways, internal controls are absolutely essential for maintaining safe, reliable, and ethical business operations. They are the backbone of good governance and risk management. And as a CMA, a key part of your job is to design, test, and continuously strengthen these systems to protect your organization's assets and reputation. Thanks for watching Chapter 5, Internal Controls from the CMA USA 2025 syllabus. We hope you found this informative and insightful. If you enjoyed this chapter, please like, share, and subscribe to the Global Commerce Academy for access to the full course. Absolutely free.